Welcome to Pip Insight Macro, the economic calendar briefing for the daily Forex news. Today is the 23rd of July, 2026. This session has 3 high-impact and 1 medium-impact releases coming up. Let's run through exactly what's on the calendar and what it means for the major currency pairs. The ECB is speaking today, and the market's watching closely. Welcome to Pip Insight Macro, this is your daily Forex news. We've got 3 high-impact events on the docket, focusing heavily on the Eurozone's monetary policy decision and press conference at 8:15 and 8:45 Universal Time Coordinated. Plus, we're tracking moves in US dollar, British pound, and the Chinese yuan. Let's break it down. Here is the full economic calendar for the daily Forex news. We have 3 high-impact releases due this session. Let me walk you through each key event and what it could mean for the markets. The European Central Bank just released its main refinancing rate decision, and this is one of the most important policy announcements we follow in the Forex markets. The ECB sets this rate to influence how easily banks lend money throughout the Eurozone, which directly impacts currency valuations and economic growth. Today's decision will shape trading dynamics across all major euro pairs for weeks to come. The main refinancing rate is the ECB's primary tool for monetary policy. It's the interest rate at which commercial banks can borrow funds overnight from the central bank. This rate is crucial because it filters down through the entire financial system, affecting mortgage rates, business lending costs, and ultimately consumer spending and inflation. When the ECB raises rates, it makes the euro more attractive to international investors seeking higher returns, typically strengthening the currency. Conversely, rate cuts can weaken the euro as capital flows elsewhere. Today we're seeing a hold at 2.4%, matching the previous level, no change. While a hold might seem neutral on the surface, traders must consider the broader context. Inflation trends, growth forecasts, and forward guidance all matter equally. Markets had anticipated this steady stance, so unless the ECB's accompanying statement signals a surprise policy shift or changing economic outlook, we may see range-bound consolidation rather than sharp directional moves. Watch for any dovish or hawkish language around future rate paths, as that's where the real trading opportunity typically emerges. Euro dollar and euro pound are your primary focus today. Euro dollar is the most liquid euro pair and will show the broadest market reaction to ECB policy shifts, particularly if this hold signals confidence in Eurozone growth or concern about recession. Euro pound is equally important because both currencies are influenced by their respective central banks' policies, so the rate differential between the ECB and Bank of England becomes the key driver. A stable ECB combined with potential BOE action could create. We're tracking the ECB's monetary policy statement today, one of the most influential events on the economic calendar for currency markets. This is where the European Central Bank signals its interest rate decisions and economic outlook, directly shaping how traders value the euro across all major pairs. With high-impact designation, we could see significant volatility in euro-based currencies over the next few hours. The monetary policy statement is the ECB's formal announcement of its key interest rate decision and forward guidance on monetary policy direction. This matters enormously because interest rate expectations are a primary driver of currency valuation. Higher rates typically attract capital inflows and strengthen a currency, while lower or paused rate hikes can weigh on it. A hawkish surprise, meaning the ECB signals tighter policy than expected, would likely support the euro across the board as traders reprice rate differentials. Conversely, a dovish miss, where the central bank signals caution or easing bias, could pressure euro pairs lower as carry traders unwind positions. We've seen the ECB navigate persistent inflation concerns while managing growth headwinds, so today's tone on both fronts will be critical. Watch for 3 key elements: the actual rate decision, any changes to forward guidance language, and the Q&A session where Christine Lagarde clarifies the bank's next moves. Price action typically accelerates 30 seconds after the statement drops and continues through the press conference. Euro-dollar is your primary pair to watch. This is the broadest measure of euro strength and will capture the full interest rate differential story between the ECB and Federal Reserve. Euro-pound is equally important given the tight monetary policy divergence between European and UK central banks, and this pair often delivers the sharpest directional moves on ECB days. Expect increased volatility and potential 50 to 100 pip intraday swings in both pairs depending on whether the statement leans hawkish or dovish. We've got initial jobless claims data hitting the calendar today, and this is one of the most frequently released labor indicators that Forex traders watch closely. A shift in claims can signal changes in employment momentum, which directly influences Federal Reserve policy expectations and US dollar demand. If claims come in hotter than the 211K forecast, say we hit 215K or higher, that suggests labor market softening, which typically weakens the dollar as it reduces expectations for aggressive rate hikes. Conversely, a beat below 211K would signal a resilient job market, supporting dollar strength across the board. The currency market tends to react most dramatically to significant misses, as claims data arrives weekly and provides real-time labor market texture. Euro-dollar and pound-dollar are particularly sensitive to these shifts since they're directly inverse to dollar strength, while dollar-yen and dollar-Swissy also respond as investors rotate between risk and safety. Euro-dollar and pound-dollar will likely see the most pronounced moves, with both pairs potentially strengthening if claims disappoint. Watch dollar-yen and dollar-Swissy as barometers for broader dollar sentiment. Weakness in these pairs alongside euro-dollar would confirm a broader risk-on environment. We're monitoring the ECB Press Conference today, which is a high-impact event for euro traders worldwide. This is where ECB leadership communicates monetary policy decisions, economic outlook, and forward guidance that can reshape near-term currency valuations. Market participants hang on every word here because the ECB's policy stance directly influences euro strength across all major pairs. The ECB press conference is essentially the central bank's official communication tool to the markets and public about interest rates, inflation, economic growth, and their overall policy direction. For Forex traders, this matters enormously because shifts in ECB policy expectations move capital flows and repricing across euro pairs almost instantly. If the ECB signals hawkish sentiment, tighter policy ahead, or concern about persistent inflation, we typically see the euro strengthen as investors seek higher yields in euro-denominated assets. Conversely, dovish surprises, recession concerns, or hints at rate cuts can weigh on the euro considerably. With no specific forecast or previous data point today, we're watching for any material shift from the central bank's recent communication. Changes in language around inflation, growth, or policy timing are the real drivers. Traders should pay close attention to forward guidance changes, any updates on the deposit rate, and commentary on geopolitical or energy risks affecting the Eurozone. Price action volatility typically peaks during the live remarks and Q&A session, so watch for breakouts or reversals on the major euro pairs immediately after the headline. Euro-dollar and euro-pound are your primary exposure points here. Euro-dollar is the most liquid euro pair and will reflect broad confidence in ECB policy relative to the Fed. Hawkish ECB comments typically support the pair upside. Euro-pound is equally important for traders focused on the Eurozone recovery narrative versus UK economic resilience, so divergent policy signals between the ECB and Bank of England. We're looking at year-to-date foreign direct investment figures for China, which measure how much capital is flowing into the country from international investors. This is a key indicator of global confidence in the Chinese economy. Today's release comes without a specific forecast, and with the previous reading showing a decline of 8.6%, we'll be watching to see if that trend continues or stabilizes. Given the low-impact classification, we shouldn't expect dramatic volatility, but any significant shifts in FDI could offer subtle insight into broader economic sentiment toward China and influence positioning in yuan pairs. US dollar-Chinese yuan will likely be the primary pair to monitor, as direct investment flows into China can affect yuan demand and supply dynamics. We're looking at the CBI Industrial Order Expectations Report, which measures UK manufacturer sentiment on incoming orders over the next 3 months. This is a key gauge of business confidence and future production activity in Britain's industrial sector. The forecast is sitting at -40, showing a slight improvement from the previous reading of -45. That's a positive sign for UK manufacturing outlook. However, with a low impact rating, we shouldn't expect any dramatic moves in cable or the pound crosses. Markets will take this data on board, but it's unlikely to be a major driver today unless we see a surprising divergence from expectations. Pound-dollar will be your primary pair to watch for any reaction, as it tends to be most sensitive to UK economic surprises. We're looking at Canada's core retail sales data this session, which strips out volatile categories to give us a clearer picture of consumer spending trends. This is one of the key indicators for understanding domestic demand and potential Bank of Canada policy direction. The forecast is calling for a 1.3% monthly increase, up significantly from the previous 0.1% reading, which would suggest improving consumer activity. However, this is marked as low impact, so we're likely to see a muted market reaction unless the actual print comes in with a significant surprise in either direction. Watch for any extreme deviation from expectations, as that could briefly move the Canadian dollar. Dollar Canada will be the most sensitive to this data, as stronger than expected retail sales could support the Canadian dollar and push the pair lower. We've got Canadian retail sales month-over-month data coming in today, which measures how much consumers are spending at the cash register across the country. While this is a lower impact release, it still gives us a window into the health of Canadian consumer demand and economic momentum. The forecast is looking for a pickup to 1% from the previous month's 0.5%, which would suggest a modest acceleration in retail activity. Since this is a low impact indicator, we're unlikely to see dramatic currency moves, but a beat could provide mild support to the Canadian dollar by signaling stronger domestic demand, while a miss might weigh slightly on it. Dollar Canada will likely be the most responsive pair if we see a significant deviation from the forecast, as it's the most liquid cross for the loonie. We're looking at China's Conference Board Leading Index for the month, which gives us a snapshot of where the Chinese economy is headed in the near term. This is a composite indicator that economists watch closely to gauge future economic activity. The previous reading came in at -0.1%, and with a low impact rating, we're not expecting this release to shake markets dramatically today. That said, any significant deviation from expectations could still spark some mild volatility in yuan pairs, particularly if it suggests an acceleration or deceleration in China's economic momentum. Traders will be watching for confirmation of broader economic trends rather than a major market-moving surprise. US dollar Chinese yuan is likely to be the most responsive pair if we see meaningful data surprises that shift expectations around Chinese growth. We're looking at the Eurozone Consumer Confidence Index this morning, which serves as a real-time gauge of how optimistic or pessimistic everyday Europeans feel about the economy. This sentiment reading can influence spending patterns and give central banks valuable insight into economic momentum. Today's forecast shows a slight improvement to -17 from the previous -18, suggesting consumer mood is stabilizing just a touch. With a low impact rating, we don't expect significant market fireworks, but this data point helps traders and analysts build a broader picture of economic health in the Eurozone. Any sharp deviation from expectations could spark brief volatility, though the euro is likely to remain reactive to larger economic themes. Euro-dollar typically absorbs Eurozone data most directly, so watch this pair for the first signs of any market response. Based on today's releases, the pairs most at risk of volatility this session are US dollar Chinese yuan and Euro Chinese yuan and pound dollar. Here is a breakdown of why each pair is in focus. That wraps up the complete daily Forex News economic calendar breakdown. The key theme today is ECB Decision Day, a euro volatility expected. Keep a close eye on the release times, a surprise deviation from forecast is often where the real moves happen. This is educational content only. Trade safely and manage your risk. That's your setup for today's session. Don't forget to like, subscribe, and follow us on X at Forex Insight for real-time updates. See you next time.